So good morning. Welcome to the ACA Academy's monthly, I guess, free webinar. I don't know what I'd call this, but I was just in DC yesterday. Got home, put my head on the bed at 2 o'clock. So I'm a little loopy, but boy, I've got stuff to share. By a show of hands, either real life or AI, or raise your hand. Can you tell me who was either watching online the CMS thing, or was there in person? Were you Lisa, Jill? Oh yeah, Brooke. There was You could only watch the first half. The second half was without you. Anne Marie watched part of it, Sharon online. So it was kind of interesting. My assistant was also watching. Well, I keep calling her that. She's not anymore. Sam's her own agent. She was watching it and she was getting angry. And I guess she was angry cleaning her office by some of the BS that was being shared. Um, um, Nothing like a bunch of people who ignore brokers telling us how awesome we are and then saying, we'll do anything for you. Tell us what you need. We're here to support you. And I just wanted to go, you haven't yet, but I was very not confrontational, but I definitely wanted to get some points across. And I do believe that they had that meeting too soon. So there is some things that I did get clarification on, and I will tell you about that. I do think they made the rule. So the new rules that we've been waiting and waiting and waiting came out officially Friday. They go live in 60 days. So even though it says immediately, some of the rule changes say right now, immediately, it's not. It's immediately at 60 days. So don't panic and go, oh crap, as of tomorrow, I can't do that. No, you have 60 days to adjust. So we have time. I got to hear some of the reasoning behind some of the rule changes. There was a lot of rule changes that are only for 2026. And it's 100% because they're trying to eliminate the estimated guess of 4 million people that have insurance on the marketplace and don't know they have it. So they were enrolled, they have a $0 plan. It was done by somebody unethically. They've never gotten who knows if they even put the right address, right? We've heard the news of the person who basically got millions of dollars, which means a lot of enrollees, because they went to homeless shelters and things like that. They went to the homeless camps. So there is an estimate of, again, giant estimates, kind of hard to take a survey. Hey, do you know you have insurance that you don't know you have? So they really have no idea. I don't know where they're getting this 4 million estimate, but that's what they're saying, that they think there's 4 million who are enrolled who shouldn't be. So 3 of the big changes that are happening are only for 2026 to eliminate that 4 million people. So the good news is we'll spend less money, right? There'll be less tax credit going out. There'll be less waste and fraud. The bad thing is the marketplace as a whole has had 4 million healthy people putting money into the pool that haven't used it because the insurance companies are getting that money, but that person isn't using it. So the rates and all of that kind of stuff is going to be affected because think about it, 4 million healthy people, as far as the insurance and actuaries and all that statistics, is going to leave. So that's the first big thing that's going to affect. So 26 and 27 are going to be very interesting for poor insurance carriers to try and figure out what they actually need to cover people. That's the weird part. So 4 million people, this is part of what the actuaries are trying to figure out right now, estimate leaving. Now, some states, this is not going to be an issue. Most of the state exchanges are going to have less of that. Not that there isn't fraud in the state exchanges. Some state exchanges are better than others as far as catching that. States like Wisconsin, where only 50% of the enrollees are helped by an insurance agent. Hawaii, by the way, if anyone wants to move there, 9% of people who enroll in the marketplace in Hawaii are helped with an agent. Well, they're not going to have fraud. Nobody's paying attention, 9%. Florida, though, I was so shocked by the statistic, I took a screenshot. 89% of Florida enrollees were enrolled by a broker. Do you think that's a legit number? There's no freaking way. That one we know there's like 1 million people per person that could help. So 89% of Florida, ironically, it was Florida, and I'm pretty sure it was Montana was number 2, and Texas was number 3. So those are, I believe, those are the 3 states that are going to be affected the most. And maybe not Montana, because I don't actually know. Is Montana a state exchange? I don't think so, but it's kind of a weird state to have fraud happening, but low percentage of people. But Florida and Texas, absolutely, right? So of that 4 million, 3.75 million could be from those 2 states, which means those 2 states will be the ones affected the most. So if you're in a state that is in that average of 60 to 30% of the enrollees were helped with an agent, you're probably okay, but this is what the insurance companies are having to figure out. Are we one of those states? Do we have a lot of fraud that's going to disappear? So that's the first bucket of healthy people. The second one is people who make too much income, and too much just means over 400% of the federal poverty level for next year. If they're healthy, why would they pay full price? I don't blame them. It'll be a very small percentage of your people who are like, it's okay, I'm healthy, but I'm going to pay the full price. They're either going to be super rich, where, I mean, I had that when we had a rate, they were paying $1,000 and all of a sudden it jumped to $2,000 a month. Oh, Montana's federal. Yeah, it jumped to $2,000 a month. I had a couple that went, and they were super healthy. Yeah, that's okay. I'm like, all right, they got money, right? They're going to pay an extra $12,000 this year for no reason at all, except the fact that they have money. They're over the cliff. So you are going to have some that are not going to care, and then you're going to have some that absolutely aren't going to pay that price. And I get it. They're healthy. Why would you pay that? So we are going to lose another 4 to 6 million people that are in the healthy pool. That is going to affect every state, not just Florida and Texas. Everybody's going to be affected by that. And again, the carriers don't know who that is. They don't know what people's income is. I mean, there is a way to maybe do some math. They could work backwards. All right, a couple of 2 is paying this much if we do the tax credit, but they don't really know. So 26, who knows what the rates are going to be, and 27 will be the catch-up year. So if they overestimate how much they need to increase, and it's which they did in 2017, rates just jumped 60%, and they overestimated. So in 2017, it was 60% more than it had been the year before. In 2018, it came down like 5% because they had overestimated. But the reverse is also true. If they underestimate, they're like, oh, we're not going to lose that many. It's not really that big of a deal. That means 27, the rates will go up because then they have to make up for the loss of money in 2026. So the next 2 years are going to be a little interesting. We have carriers leaving. We have carriers expanding. We have ICRA talking about. So there's going to be a lot of very interesting things happening in the next 2 years. And I'm telling you, you as an agent are more valuable now than you ever have been. You can make an amazing living helping people on the marketplace and off the marketplace. So there will be, I've already had lots of people ask me, I will be trying to deep dive into some of the alternatives, but really this is your time to do it. Find 3. Deep dive, find the errors, find the gaps, find the holes, find what it would cost to cover those holes, and get ready to tell your people. Option 1, marketplace, full cost, here's what it is. Option 2, not as expensive, but a comprehensive plan. Option 3, it's a little less, but it's got limitations. Here's some ancillaries to cover those limitations, but people are not afraid of risk as long as they know about it ahead of time. And then that's where you're going to find the person who wants to take no risk at all, and they'll pay the full price. Okay, that's fine. But they know their budget and you don't. So it's a good time to be an agent. Don't panic. It's good. So couple things I found out, and maybe you guys knew this. I did not know this. Evidently, I don't even know how long it's been happening. But right now, if you put in so-and-so is making this much income, and it gives you the 90 days to prove income, the system, if you didn't do it in those 90 days, the system would automatically extend it for 60 days. Now, I did not know this. I did not get that announcement. Well, that's going away. So if you did know that, that's going away. So I started panicking a little bit because they also got rid of the letters of attestation. Letters of attestation are what you need when you don't have proof of income. And by the way, Jackie, I heard you moved. Congrats. If you don't have letters of attestation, or you don't have income, it's usually future income. I have two examples. The very first time I ever used the letter of attestation, I had a couple that retired from a very lucrative job. Well, retired, they quit. And so their previous tax documents showed they made a lot of money. So, of course, it asked for a proof of income. Well, this was their new job. They quit their job, they bought an old house, they were renovating the old house, and they were going to sell it by August. And they knew how much they were going to get, an estimate of we're going to make 50,000 from this sell. There's no proof of that. How do I prove that? It's December. I'm enrolling them for January. They're not even going to maybe get income till August, September, October. How do I prove that? And I'm like, well, let's try this letter. So I said, to whom it may concern, for application number, blah, blah, blah. We bought a house. We're going to sell it in August. Our estimated income is whatever it was. Ask us if you have questions. And they took it. And I went, oh, well, there you go. That's the perfect use for attestations. Sometimes self-employed, right? Somebody just started. They don't even have a ledger. They don't know. They're like, I don't know. They're farmers. They don't know what they're in dairy farming. Milk could change prices, every week. So I started using letters of attestation. They have removed it for 2026. Well, it might start immediately. I can't remember, but it ends December 31st. So again, the reason they're doing this is to stop the unethical agents from just making up documents. They could not give me a clear answer on how to do income that we can't prove. Future income. That's the biggest issue. I did hear from somebody, a different guy who's doing the ACA summit in Utah. If you haven't got those emails, I'm happy to send you to. It's the first full ACA summit. But what they have made, and you can make this yourself, is a self-employment ledger. You can go on Google, find self-employment ledger, and just make a standardized self-employment ledger. Our estimated gross, our estimated expenses, our estimated annual income. Ta-da! And submit that, because employment ledger, self-employment ledgers is one of the documents you can do. But if you're like me, where I've got somebody who has nothing, they said, well, write us a letter, explain it. Well, that to me sounds like a letter of attestations, but they got rid of that 60-day extension. All you have to do, though, is update the application, change it by $1, and you'll get another 90 days. They did get rid of that. I don't think they know about it, so don't tell them. If you adjust the income, you'll get another 90 days. And maybe then you do have proof. Somebody who's going to collect Social Security in July, maybe by the time you do it again, all right, now I have the documentation. So there are ways around it. But if letters of attestation have been your go-to, you're going to need documents, which you should be getting anyways. People estimate their Social Security wrong all the time. They usually are giving you the net that they get in the bank, not necessarily the gross, right? Get as many documents as you can. If it's a paycheck from last year and they're retired, that's not going to work. You have to use current information. But if you cannot, you can certainly submit documents to them, and we'll see. They didn't really have an answer on what we should do for income we cannot prove. That's a future thing, except to write a letter, a detailed letter. I'm like, all right, we'll see. And if we need more information, I would just probably extend it for another 90 days. Any questions on that? I know I have a lot going on in my brain, boy. I was like fired up from yesterday. So Virginia, I know CVS is leaving, have no idea. This is the issue with states that are in the FFM. If you're a state exchange, you kind of have a little, you see, as a state, just as a state on whole, if you're like, I'm going to take the money and I'm going to make my own state exchange, you have more control. You have control on commissions, you have control on networks, you have a little bit more say because you as a state decided we are going to be proactive about what's happening. But if you're on the FFM, that means the state went, we're out. Well, that's got pros and cons. And one of the cons is that means the state is not taking a vested interest in making sure networks have good coverage. Agents are covered well. I mean, there are states that are like, you have to pay the agents. You cannot opt out. So these are reasons to get involved in NABIB and HAFA. If you don't know what those are, look them up. NABIB is NABIP, HAFA, HAFA. Those are two different companies that are trying to help at the federal level, but NABIB also helps at the state level to get some of those rules changed. I personally said this yesterday at CMS. I said, you have the power, CMS. You have 10 things that every insurance company has to offer in order to be on the exchange. You could make it 11, that they have to pay a minimum commission of, and they cannot opt out. They can't, mid-year take that away. Right? I mean, that they could say that. There's no reason they couldn't protect us. But they're kind of going, well, it's on the state. So talk to your state people, get them to help. If you think about it, we have not had a raise, most of us, since 2016. 2016, we had 300 people going into open enrollment. I had 600 coming out of open enrollment, and I made less money with 600 than I did with 300, because that's when the commission structures changed. So I have not had a raise since 2016. Name an industry that you can say that. So I think time goes by fast. Talk to NABIB, get them, help them. Go to when they're like, hey, we're having a thing at the state level, you want to come talk? Yes, go to the state level, because the Fed moves slow. The state moves a little bit faster because it's their constituents. So it's my little plug for going out there and getting them to help. So some of the things we want them to require at the federal level, they're going, no, this is a state issue. So that's one of the things is network. It really is a state issue. There's some other things that are state issues, but that one is big because it's a state and a carrier issue. This is not a federal issue. Do you want them to put more regulations? The more the feds are involved, the more rules, right? That means they are dictating what carriers can and cannot do, and it really should be state. So, yeah, I don't know. You hope somebody's going to step in. I know Oscar and Better are kind of doubling down. They seem to be in it for the long haul. They're very also ICRA proponents. Some of those, I know one's in like 12 states and one's in 26 states. They're not going away so far. Wisconsin has already lost one of our nonprofits that we loved, and it's going to affect our county in a pretty negative way because of who they covered. But maybe somebody else will come in, who knows? So you're just going to have to watch and talk to your carriers. Second thing that's happening for 26 is that if somebody, okay, so there's a rule, people have argued me about this, but it exists. When the Affordable Care Act was passed, if you are getting a tax credit and you miss a payment, you have 3-month grace period, right? I don't tell my people that because we know people will wait till the 3rd month to try and pay. But they do have a 3-month grace period. If they go through the entire 3 months, the insurance company has 2 options. One, they just can put it back to the beginning, go whatever. You didn't obviously want it, 3 months, you're done. Or they are allowed to ask for 1 month of that 3 months for their time, energy, effort, paperwork they sent out, whatever. Some carriers have been collecting that or attempting to, and some have not. In my state, we have one that does, but they just got bought. They got bought by Medica. I don't know if Medica does or not. So now I got to find out. So 2026, and I think that one even starts immediately. If somebody has a past due, let's say they found out they had a job mid-June, they didn't tell anybody, they got their July bill, they just ignored it, maybe they went and canceled it, and they have this July bill that they owe. when we go to enroll them, because they quit their job, retired, whatever, into that same carrier for January, they owe for July. The carrier can say, nope, I want my past due premium. Now, CMS made this rule. They have no idea how it's going to be implemented because the carrier is going to be the one to implement it. So it's going to be, again, pay attention this open enrollment to your carriers, because they're the ones who should be telling you how this is going to work. Is their system going to be so fast that as soon as you show somebody and they owe $100 and you click to pay and it goes to the website and it's going to say $100 plus you owe 300 or whatever, or 25. Supposedly, as long as you start paying on that past due, you'll have the 3-month grace period to get completely caught up. But again, this is based on the carriers. It's also based on the state. So if the state allows it, it's allowed. If the state does not allow it, the Fed said this is allowed, but states rule. So they were not overriding state law on that one. So if you already know your state doesn't allow that, you're fine. But my state does. Again, I only had one carrier that did, but now I don't know. Maybe some of those carriers are going to take advantage of that. So that one will start for 2026, but it will sunset December 31st in 2026, unless things change. So, so that's an interesting one that could be a surprise. If you have somebody who owes back and they're just thinking, I mean, I do know there's people that would basically not pay November, December, or October, November, which is I don't understand why they do that, thinking I'll just start new. Maybe they're broke and they just don't have any money, or they lost their job. And you're like, tell me you lost your job, right? But they won't be able to do that. Now, if they roll into a different carrier, they won't owe for that other carrier. So if they owed Anthem and they now January they're going with United, they don't have to pay Anthem. But if they want to keep their same network doctors or whatever with that same carrier, they're going to have to pay. All right. There's so many things that all right. The 150 SEP open enrollment, that one, which is 99.9%, the reason we have so much fraud, is going away, but only until December 31st of 2026. So in theory, it's going to come back in 27 unless something changes, right? I'm not sure how I feel about that unless they put some serious protections around being able to just automatically enroll people you don't know. This will be a problem. I am personally against it. I've never actually agreed with it. I don't know why, because you're poor and sick, you get to just enroll, but somebody who has a little bit more money than you that's sick doesn't, right? I do feel sorry for the people who are sick, okay? That's not the problem. But if we are only enrolling people when they get sick, we are adversely affecting the carriers, which means all the rates are going up. They can't adjust. They need healthy people. If you are like, no, these people don't know. And I know there's pockets. I was talking to an agent in Texas. She's like, every day, every week, I got people crying in my office that are low income that didn't know there was an option. Okay, make a campaign. Flood that area, spend the money on digital marketing that shows up on everybody's cell phone everywhere they freaking go. They're at Walmart, boom, it's showing up. They go to the doctor's office, boom, it's showing up. Spend that money if you really think that that's a problem. That means you just got to unlimited, you just sit at the office and let people come, because it's true. There are pockets. We all know there's pockets. Go to those pockets. Put posters in all the grocery stores, at the quick little gas station that people run to grab their cigarettes and pop, right? I'll be at the library from 9 to 5 for the next 2 days for free. You will get people. You can fill in for the navigators. That's really what the navigators were for. I know there's people who hated the navigators, but the navigators went to places that we didn't go. They were not our enemy. They try. In fact, I was like, "Ooh, where's the navigator?" So I could go talk to them, because then they gave me the complicated cases. They gave me the hard ones, So I get it. We want to help people, but just because you make less income doesn't mean you should miss open enrollment. And I think even the lady who was talking about it at CMS kind of feels the same way. That's what the annual enrollment is for, not wait till you're sick and then we get it. But then I think of Texas and Florida who have no Medicaid system. Again, now we're back to it's a state issue. So if you live in a state that does not have a Medicaid system, you have a whole pool to reach out to. So the 150 is going away, which I think is a good thing. It's going to help reduce the fraud. It's supposed to come back in 2027. I'm very much against it unless they can show, you know, partially protecting and then a real reason why they should be doing that. So, so just be aware of that. If that has been your market, you got 60 days. So no, it hasn't gone away yet. The 150 still exists. So if that's who you have been advertising, that's where you've been going. Well, it's time to start thinking where else you're going to go. And you got 60 days to line it up with that. Any questions on the 150 SEP? All right. The $0 deductible or $0 plan auto renew to $5. I'm again okay with this. I think this is a great way to get rid of the $0 people who don't even know that. To me, that's all they had to do. They didn't need to do all the other stuff. That instantly is going to remove the people who are signed up that don't know they have it because they don't have any cost. So what that's going to do, unless now big beautiful bill aside, which right now says if you let it auto renew, you get no tax credit at all. That's a big issue. So please contact your Congress people. Nobody's talking about that one. But if that doesn't go through, CMS has said if somebody has a deductible or a copay or premium, I love words, a premium that costs nothing and they just automatically let it renew, it's going to go to $5. If you have a client who honestly cannot pay $5, then they're going to call you. Let me redo your application. You have 3 months to pay that $5. But I'm going to tell you, if you only advertised $0, $0, $0, you were doing a disservice to your people. You were too busy trying to say the $0 was the reason to buy insurance. Not now you have insurance so that you don't go into medical debt. Now you have insurance to protect you. Now you have insurance to go get your annual. Now you have insurance to cover your network. I mean, you know, I get some people that did it themselves and they logged on and they found a 0 and they just plugged it in. But that's not why I sell insurance. I try to sell affordable insurance. So, you know, if somebody, I mean, and I do think a lot of the fraudsters, that was their marketing, right? It'll cost you nothing. We'll give you a $500 coupon, all this, you know, these lead generating companies. So talk to your people. You can look who's got $0 $0, you know, premiums. Send them a quick text. Don't let it auto renew or you're going to have to pay $5. If you know, but it's okay. I've been doing this since the beginning and we had people, I mean, poor people, they're the ones who want their insurance. They understand they could go into medical debt. They're right on that edge. I mean, I still remember this lovely old lady calling me for 2017 when all the rates were going up stupidly, just absolutely stupid. And she was prepared. I could hear her. She's like, okay, let me know what it is. And I'm like, honey, you still have low income. It's only going to cost you $10. And she just was like, she started crying because she was prepared to pay 100 and she did not have 100. She was literally one of those little old ladies living off Social Security, you know. And I'm like, no, you're fine. It's going to be $12 for this, you know, CSR silver plan. So she, you know, they will be good. If they cannot afford $5, then they can't afford this, right? They can't afford the coffee. They can afford $5. So that will get rid of a lot of fraud. I can't remember if that's sunsetting or not, but I'm also kind of waiting to see what the Senate does with the big beautiful bill, because the big beautiful bill says if you let it auto renew, you get no tax credit, nothing. That's going to be much more of an issue. Somebody gets a $5 bill, you know, it's going to be created. Remember, auto renew happens December 16th at 12:01 a.m. The carrier is going to send out, they're going to get that, then they're going to send out a $5 bill. They may not even get it until January 5th. All right, I can fix it going forward. If somebody really can't pay the $5, you can call the marketplace and have them retro it, and you can do that. But you can't, somebody gets a bill that's now $1,000. Well, you can get that back at tax time if you just pay that $1,000 and let's update your application. And as of February, it's going to be $12. They don't have $1,000. There's always a few. I know there's some rich people that, you know, were very smart with their money and their taxable income is, you know, 20,000 and they've got the money, but most of those people are not. So that to me affects our people way more than the $5. So I'd much rather have $5 than no tax credit at all. So reach out to your congresspeople. I tried to talk to my congressperson. I sent him a letter about the FPL, trying to get that moved from 400 to 600 at a minimum, something. And he sent me back a lovely standard letter about why he supports the big, beautiful bill. I'm like, I'm not talking about the big, beautiful bill. So right now, all the senators are talking about the big, beautiful bill. So email them, say, hey, so-and-so, whoever it is, me, it's Tammy and Glenn, those are my two in the Senate, telling them, hey, in the big, beautiful bill, this part of it is going to affect you. They have already gotten rid of, on the big, beautiful bill, two things. The HSA changes that House suggested, those are gone. So if you were looking at that, that's gone. And the other thing they also got rid of is if you made less than 100% of FPL, that they could come back and ask you for the tax credit. That is also gone. So, which is stupidest thing I ever heard. Somebody didn't make enough money. Let's go get more money from them. Like, even haven't like, so that is gone. So yay. I'm trying to use AI to see what other health things are in the big, beautiful bill, but the auto renew is the big one that I know of. So reach out to your congressperson, explain, don't just say this is stupid, explain why and how that's going to affect them, and that you agree with the $5 CMS rule that's already in place. So I wish those two departments had talked to each other. They clearly did not, right? Any questions on that? The $5? No. So see, Virginia, that's what I just said. If you make less, there's no penalty. There's never been, it makes no sense. If I say you make 50,000 and you make $37,000, you get money back. But if I say you make 17 and you make 14, you should pay it back. Why should you pay that back? So no, states that have no Medicaid system, you do not have to worry about that. If you say somebody makes 17 and they make 10, okay, not a big deal. But they are going to put the burden on us. And this goes kind of back to that attestation of where are they getting this money from? 26-year-old, mom's going to pay my premium. How about mom pay you 20,000? Mom's going to pay me. Yeah, instead of mom paying the premium while you live at home and you don't make any income, mom can give you income. She's going to give you $17,000. So, so that is, you know, I'm self-employed. I'm going to help my mom around the house. My 18-year-old, I hired her. I pay her a weekly salary to do administrative stuff, and she's going to get a W-2. I'm just doing it through QuickBooks. My account set it up. It's not that much. So if parents really are not going to make their kid at 26, 27, whatever, go out and you are in a state that doesn't have Medicaid to help them, that's how you're going to have to do it. And yes, you can tell your agents in Alabama not to freak out. I was confirmed with that yesterday. If they make less, there will not be a penalty. That was removed. So, but if you overestimate, you're going to have some kind of documentation that says it, and no more letters of attestation. Self-employed. Hey, and I mean, seriously, you're self-employed. You don't necessarily know, right? Oh, it's a new self-employment person. They quit their job and they're going to sell trinkets on the side of the road. All right, I'm going to make an employment ledger, self-employment ledger that says this is what I expect to make. It matches the marketplace. We said 17,000. I said on my ledger, I'm planning to make 17,000. And if you make 14, you're not in trouble. So until the states that don't have expanded Medicaid come along, I think they're going to leave it at this. So I think they keep wanting the states to make those state exchanges. I think, I mean, there's been a lot of reasons people why the Affordable Care Act, what the expectations, blah, blah, blah. It seems like they really kind of thought all the states would go, awesome, let's take the money and do it our own way. And they weren't really thinking long term, those who stay on the Fed. But they're not making them take it. I kind of wish they would. I wish they would, like, by 2030, every state has to have their own exchange. Just put a date out there and put it to the states. But right now they're not requiring that. So but I will tell you right now with what's happening on the Medicaid side. So some of you know about that different part of the big, beautiful bill is affecting Medicaid. It's going to affect dual eligible. It's going to affect a lot of things. The states that did expand Medicaid, like South Dakota is a great example. They don't have income tax. So they had no Medicaid system. Florida doesn't have income tax. There's Texas. That's why there's no Medicaid system, because they don't have big high income payroll income taxes. They're taking it away from those states. It's going to go away. I don't know how many states will stay once the federal money is gone. Most of the federal Medicaid system money is to help nursing homes, not the health system. Those people. People think Medicaid is about those people. It's not about those people. It's about our elderly senior people that are in nursing homes. There's a few states that have required long-term care, but it's coming. It's either going to be on your taxes or you're going to have to get long-term care. The baby boomers are going to break the Medicaid and nursing home systems. They just are, just because of the volume. So that's, kind of educate people that those people are your grandma. Those people are your parents. It is not the able-bodied person who collects Medicaid and doesn't work. That is such a tiny, tiny percentage of the system. So I'm a little bit irritated with the big, beautiful bill. It sounds good to say, if you're able-bodied, you shouldn't be on the system. That sounds great. Most people at the core want to be useful. They want to have a job. They want to do something useful. Most are not. Those states, there have been many states who have done this in the past, put in a system to save, I'm just using random numbers. These aren't legit numbers, but it makes my math easier. Let's just say the state says, we believe there's $1 million of wasted money going to these layabouts who are eligible to go get a job but aren't. And they will spend $4 million to find the 1 million. And then they go, this does not make any good math. And then another state does it, and it's the same thing. States that put in drug testing. Oh, these are drug users. They spend millions trying to find a handful of people. And they usually end up taking that system out because it costs way more than it is. Every system, every company, every state, every group of people that have ever been together will have some of those people who take advantage. Did you know ants do? I found that fascinating. We're always like, work like an ant. Did you know there's lazy ants? There is. There's lazy ants. And then there's the ants that overwork. There's like this balance. And we have that in our industry, in our nature as well. So there are those who will take advantage of the system. Some of them take advantage because they don't know anything else. It's generational. They've never been told a different way. Telling them they just have to go get a job isn't necessarily helpful. I love nonprofits that are helping to change generational ideas. We have a great one in Milwaukee called City on the Hill that helps people that have been in generational poverty hear that they don't have to be. And they never even knew that was a thing. Helps them get education, helps them get out of that cycle. And it's not because they took their money away, because they gave them something else. So, if you're looking at that, just letting you know, that's kind of the Medicaid problem right now. That's happening with Big Beautiful Bill. And I saw quite a few protesters when I was out there. They were all wearing purple shirts. I was like, there's something going on over there. I was kind of looking, and that's what that is. So that will affect us a little bit, but it's really going to affect the Medicaid expanded states. more than the states that aren't expanded. They're going to go, see, it's a good thing we didn't expand. Um, so, so much rules happening. Um, do, do, do. Oh, income. Income documents. You're going to see an uptick in requests for income documents. How the system works, why they ask for it, is if we put in, hey, so and so is making 50,000, the system looks at the most recent tax document, which was, so if it open enrollment for 26, right, they're going to look at 24s. So in 24, somebody was working full time at some industry, maybe they were a CEO and they made 500,000, I don't know, and we're saying they're going to make 50. The system's going to go, that does not match. So they're going to want documents. If you get the magic question, how many of you know about the magic question? I've talked about the magic question. All right, the magic question. When you put in the income and it says, according to our records, the income you entered is either more or less than previous years. That's the magic question. Pretty sure it's option 2. There was a job change, retirement, just push that one. Don't put because there was a change in family. Don't put the third one, and do not put other and type in a long explanation. If you put, I'm pretty sure it's number 2, but it's the one that talks about job change. Click that one, then the system goes, oh, okay, you had a change. We got you, you're good. And they won't ask for documentation. That's why I call it the magic question. If you push any of the others, they want documentation. If you have a divorce, though, it doesn't matter. You're not going to get that question. You're going to have to prove, because you're saying it's a single person filing with this much money, and everything they shows they were married and had different income. So you're going to have to show proof of income for that. So just kind of, if somebody, tell your staff, tell yourself with, hey, I just got divorced. All right, I'm going to need proof of income. You're just going to have to. The other one is the 26-year-old. If you have somebody who's been on the marketplace with the family, and now you're kicking them off because they're, no longer tax dependent, whether they're 26 or 18, doesn't matter. If you have a family that's been on there and one of those kids leaves the family and now goes on their own, it's going to ask for that as well. Because again, the most recent information it has is that they were part of this family and had more income. So start just requesting those. Bring your documents, bring me your pay stub, bring me whatever you have, because those ones you're going to have to. So if they can find documents out there that collaborates the income you're putting in, then it's not going to ask that question. But if they can't find it, you're either going to get the magic question, you're going to go, ha, the magic question, or you're going to have to show documents. So, and remember, your document needs to match 100% to what you have on the application. Do not say they make $20,000 from a job and then submit a payroll stub that shows they make 30 or 25 or 22. It's really frustrating. Sometimes they nitpick a little too much. But if you are putting in the pay stub and it says, here's I'm subtracting health insurance and all that kind of stuff, make sure it matches 100% with what you put on the application. Because if it doesn't match, then they're not going to take it. I learned that one the hard way, and then you're spinning your wheels. Same with SEP documents. So those have been coming in and I've been seeing it. Oh, why do they sometimes ask and sometimes not ask for documents? Have you run into that? Right? Me too. I'm like, my brother and I went out and we enrolled 4 people. 3 they didn't ask, 1 they did. I'm like, what the heck's happening? Same thing. I did not know this. They have a contract with a third-party company, which I don't know if I actually wrote it down, but something I never even heard of. See if I wrote it. They were whipping through some things fast. But it's basically it's a company that knows who has insurance. I don't know how they know, but they have all the names. So it connects to that system and it finds Bob and it says, yeah, Bob had employer coverage, and it's going to come back and go, yep, they did have insurance. And I don't know if the system's just assuming their coverage is ending, but that's why you don't get an SEP request. But if it goes out there and it finds nothing to collaborate your story that they had previous coverage and now it's ending, it's going to ask for that documentation. So if you HR letters, I have a standard HR letter that I send to people. If somebody's like, I don't know, my HR doesn't know, I have one. And it says in bold red, delete red font, insert your letterhead. and sign here. And I just hand that to them, and then they just make a really simple one. So that's the easiest one. COBRA document, a document that says, hey, you're now offered COBRA, your insurance ended, this is when it starts. That works. You can also, if it was a less than friendly separation from their job and they can't talk to the HR, they can call the insurance company, the phone number on the back of the card. They will have proof, as long as the employer has told the insurance company this person's coverage is ending June 30th, they can get a letter from the insurance company that shows that. There is one issue. They don't email that. They mail it. They will fax it if it's a personal fax. So my people will tell them my fax number. I'm the only one who sees it, honestly. Nobody else in the company even sees those. And they just tell the insurance carrier, oh, fax it to me. Here's my fax number. And then I get it, and then I have it. If you cannot get that, can't get the HR letter, can't get the COBRA document because that takes a while, can't get something from the insurance company, there is a letter of attestation. You can go to healthcare.gov and look it up, where you write, my insurance is ending this day. I cannot get documentation, and here's why. TRICARE, I've run into that when somebody was getting in the military and they were getting divorced. Oh my goodness, it was like 4 months before we finally got the documentation. And the system's like, no, you have TRICARE, you have TRICARE. Well, they don't, because they're getting a divorce. So that's where the letter of attestation for SEP will work. But they're like, you better explain really well why you don't have other documentation that shows it. Medicaid denial. Yes. If somebody tells you, hey, I just got a letter, bring that letter, right? If you are in a state, my state's awesome. Other states are awesome. They give you an email, a letter arrives on the 15th telling you your insurance is ending at the end of the month. And then there's Texas. I know I love picking on Texas. You get a letter at the end of the month that says, by the way, your insurance ended January, 15th of the month. Sometimes you get the letter after the fact. That's when an SEP document would work. Somebody was talking about this yesterday. It's standard that when somebody turns 19, when they turn 19, they're kicked off, but they didn't have that document yet. So they wrote an SEP saying the state of, I'm just picking a state of Virginia does this, and this is what happens. And then they take a screenshot showing that it says right on that website of the Medicaid system, children are kicked off at 19. The screenshot isn't an SEP document, but that combined with that attestation will help. So there is a way to get that if you cannot find any other documentation. But to me, the HR, 99% of HR companies, or companies with HRs know this now. If they really don't know, you can ask them to give you a Medicare letter. All HR departments should have the Medicare letter that says they had Medicare qualified insurance and it's ending on this day. That letter works too, even if the person is 45. It still works. So worst case scenario, they can even use that one. So Lisa, yes, that's what I talked about earlier. You cannot write a letter of explanation or a letter of attestation for income as of August, 23rd, I believe. So they're not going to accept letters for 2026. I think that one kicks in right away. But go look out at the rules, take a look, read them. Heck, copy the whole thing, stick it in your AI of choice and say, summarize this. When is the thing starting? When, what do I, have it do that. Start using some AI. AI is awesome. We're kind of getting down the last 10 minutes, so I'll leave it for some questions. I know there's a few on here. I will tell you, there is a big misunderstanding out there that if you are denied Medicaid, that's an SEP. It is not an SEP. It's only an SEP if you also applied during open enrollment. So somebody in June says, oh, I need insurance. And you're like, well, apply for Medicaid, you'll get denied. And then that is not true. That is not an SEP. I don't know where that started coming out. I don't know where that rumor started happening. It's only an SEP if they also applied during open enrollment and were denied. So that is not a cheat. You cannot get around because somebody's denied Medicaid. only if they also applied during open enrollment. Now, right now, we still have the 150 SEP for another 60 days, but just so you know, that is not an SEP. I saw, Brooke, you said if someone has an income of 20,000 from parents and they're still not eligible and they would be kicked over to Medicaid, once denied by Medicaid, they would come back to the marketplace with no one, but then no longer qualify for a tax credit. So if they would have to pay full cost of plan, I just want to verify I'm understanding correctly. So no, if they have an SEP, they have to have that original SEP. Let's say they lost their job. I don't know. They got kicked off mom and dad's plan because they're no longer tax dependent. Well, that is a qualifying event. So if your system tries to kick them to the Medicaid system, and I know it can take 2 months, you get that denial letter, you can go into the marketplace. If they need it to open in the past, you can call the marketplace and it will backdate it. You have to do it. It's an escalation. You got to talk to a second level person. They can backdate those Medicaid denial. The system tried to send me to Medicaid. I got a Medicaid denial, but now I've been without insurance for 2 months and I needed it. They will backdate it. But if they have an SEP, and they make 20,000 from their parent, they're like, yep, I'm self-employed. My parents will pay me, blah, 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 whatever. They will be eligible because they had a true SEP. So either because it's 150 or they lost their job. See if they're missing anything else. I don't know what you mean by ghost network, so you'll have to explain that to me. Are you talking about when it says they're in the network, but then you find out they're not in the network? That'll be Virginia if you're still on. There they are. I cannot hear you. I saw you unmuted yourself, but you are not.
Can you hear me now?
Yep. There you go.
So in Florida, along with probably other states, I think I saw Jackie said Texas, I'll go to Ambetter. We only have a few carriers. Florida Blue's captive, so they own a big chunk of the marketplace. But they'll say, yeah, we have all these doctors. We have a plan here. And then you go put in 8 million doctors and they don't have anything. So it's this whole thing about ghost networks where they say they have coverage and they don't. There's actually been a lot of info out there reading about it. It's just frustrating for us because, we want to have an option because Florida Blue's captive. And
Right.
I was just wondering if I saw that was potentially going to be brought up if you'd heard about that. And Jackie, pipe in if you know anything too, but
They said it's a state issue. You have to get your states to make the carriers do it.
Okay.
Because it is, and I think you're in Florida, you're on the ground, talk to your Florida commissioner of health.
Okay.
Bombard them. Tell them personal stories of a person. I mean, that's what's going to get them. Hey, I signed up this sick person who has cancer or whatever, and I went here and it says they're in the network and we signed them up and then they went there and now they have all this debt because the system isn't working. And that's just one of 10 stories I can tell you off the top of my head. That's what's going to get them to do something.
Okay.
Not us complaining about it and how it makes our job hard, how it's hurting their constituents. If you have those stories, have your client write that up.
Okay,
This
so
is
it's a
how it
state
hurt
thing.
me.
Got it.
That's going to get more changes and more things. You got to get the states to pay attention to this. And I don't understand. The Affordable Care Act's here to stay. Whether you agree with it or not, states, governors, get over yourself. These are your constituents. So that's going to be the easiest. Not that it's easy, but that's probably going to be the fastest way to have those ghost networks be accurate.
Okay.
Because right now it doesn't affect Ambetter, United Healthcare, whatever, to have it be inaccurate. Right? It's not hitting them in the pocketbook. If it affects their pocketbook, if the state says there's going to be a fine because you don't have it listed correctly on your website, and it's going to be a big fine, guess what they'll fix? So go to the state. Viola, you asked what can we offer people who don't have SEP? I will talk about that later. That's a whole different thing. So yeah. Bobby, what if the kids get denied Medicaid when they apply, but the father gets approved, but the kids may qualify for Medicaid? You're talking about the system making the kids go on the Medicaid system?
Yeah, because I had a friend of mine, he's a roofer, so he's an independent contractor. He had reached out to me. He had went online and did it himself.
Ah,
And hey, I need to see if I can get my kid on there. And I said, well, he was denied Medicaid. I was like, well, you should have got a letter in the mail or an email. He said he never received anything, so I just wasn't sure what route to go there.
well, he got something. How
Yeah,
does he know it was denied? It could have been an email or something. Um,
yeah.
I will tell you what, I will just, so you guys know, this is what my Medicaid system told me. If I'm in the system and I know 100% that this person, child, whatever, is going to be denied Medicaid, I just mark that they were denied Medicaid. I don't wait for the letter because I know they're not going to get it. I know my system. I know my state and I know my Medicaid system. And the Medicaid system is like, yes, please do. We're processing all these thousands of things that make no sense. And then we have to try and figure out backdating. If you know they're not going to get it, you can say denied Medicaid. I typically just use the 30th of the previous month.
Okay, that's what I was going to ask next. So I can
That's
go in
the
there and
way
do
to
that.
do it. So
Okay,
you could go
perfect.
in there and it's not usually asking for proof of Medicaid denial unless they actually are in Medicaid.
Gotcha.
So when you type somebody in and you want them to have it and all of a sudden it's like, send us proof that they're not in Medicaid, that means they are. Now, maybe they told you, maybe their coverage is ending May 31st and you're getting enrolled for the next month and they still technically are. But when they say send us proof of Medicaid denial is when they are in the Medicaid system. They don't show you, they do not, at this time, of course, all that stuff could change. At this time, they're not asking you to show that you filed, applied, got denied. They're not asking for that.
So Chris, it's
Yes.
Tina. So I have the same situation, a couple with 6 kids, age 12 through 1 years old, and they all are going over. I mean, I haven't put the application in yet,
Yep.
but in the quote, they're all going over to Medicaid to CHIP. And so how would I know if they were denied or not? The couple makes 98,000 a year.
So you have to know your Medicaid system. You need to know where your Medicaid says, yes, kids are on and kids are not.
Okay.
If you know that your Medicaid system's like, no, they make 90, they're not going to, then even on the quote, you can say, thank goodness, I love Health Sherpa. They are trying really hard for us, by the way. I know we like to think them as the bad guy. They really aren't. They are bound by CMS things. There's a spot you can say no, and you can add them to the quote. But you can also tell somebody, hey, apply. If your kids get it, let me know, right? I'll take them off. It's easier to take them off sometimes than add them. But if you know, you have to know your Medicaid system. I know my Medicaid system. If I use the family that size, the kids would absolutely still be on. But there's other states that are like, no, it's not. So know your Medicaid system. The Sherpa is the federal system. It is not state specific. That's partly why the state exchanges are nice, because it's state specific. They know where the Medicaid system isn't. The feds are just saying, hey, we think you should go on Medicaid, right? Even though they know Texas doesn't have a Medicaid system or Florida doesn't have a Medicaid system, they kind of have this idea of what should be. And so if you know your state, you can say they were denied. All right, we're at the
Thank you.
bottom of the hour. Thank you, everybody. By the way, I'm my mastermind, my masterclass that's happening in September is 50% filled. So there's only 10 more spots left. If you're thinking of doing it, you should come. I am so excited. We're gonna have so much fun. It's gonna be a really good time. And I am absolutely gonna do a very deep dive in the ancillary products and the alternative products and how to protect your clients. So if you really want a deep dive, come see me in September. I will talk to you guys next week or next month and look for this on YouTube. All right. Thanks, everybody.
Thank you. Bye.
Oh, yes. And forms and animations.
Hmm.
I will share as much as I can.
Thank you, Christina.
Thank you.